If you are over 60 and you own physical silver, there is something important you need to know before selling even a small part of your stack. A decision that feels completely normal, like selling silver you have held for years, could create an unexpected financial consequence that many retirees never see coming. And the shocking part is that the problem may not appear when you sell. It may not appear on your tax bill. And it could show up years later when you receive a letter telling you that your Medicare costs have suddenly increased. Many retirees build their silver holdings slowly over decades. They buy coins, bars, and other precious metals as a way to protect their savings against inflation and economic uncertainty. But many people never realize that selling silver at the wrong time could affect another important part of their financial life, their Medicare premiums. Here is what is happening. The government uses a system called IRMAA, which stands for Income-Related Monthly Adjustment Amount, to determine whether some Medicare beneficiaries should pay higher premiums. In simple terms, if your income crosses a certain level, Medicare can charge you more for Part B and Part D coverage. For 2026, the first major income threshold is set at $109,000 for single taxpayers and $218,000 for married couples filing jointly. And this is where many people get caught off guard. The system does not work slowly or gradually. It works more like a financial cliff. If your income is just below the limit, everything may look normal. But if one financial move pushes you slightly above that number, you can suddenly enter a higher Medicare premium bracket. That one change can mean hundreds or even thousands of dollars more in yearly costs. Now this is where physical silver becomes important. When you sell silver for a profit, that profit can count as taxable income. And that income may affect the calculation Medicare uses when deciding your premium level. Many people think, I sold my silver, paid my taxes, and the transaction is finished. But Medicare looks at your overall income picture. The amount you earn matters, and that is why a silver sale that seems harmless today could create an unexpected problem later. Let's look at a simple example. Imagine a retiree who receives Social Security, pension payments, and other income totaling around $90,000 per year. Everything seems comfortable. They are below the Medicare threshold and paying normal premiums. Then they decide to sell part of their silver collection. Maybe they need money for home repairs. Maybe they want to help a family member. Or maybe they simply believe it is the right time to access the money they saved. The silver sale creates a $25,000 gain. Suddenly, their income changes from $90,000 to $115,000. That extra income pushes them above the Medicare limit. The result? Their Medicare premiums could increase, and the retiree may not even understand why it happened. The most surprising part is the timing. Medicare usually does not react immediately. It uses previous tax information when calculating these adjustments. That means the silver sale and the Medicare increase can be separated by a long period of time. Someone could sell silver today, move on with life, and completely forget about the transaction. Then years later, they receive a notice saying their Social Security payment is lower because their Medicare premiums increased. This is why understanding the connection between silver and Medicare matters before making a major financial decision. Because once the tax year is over, your options may become much more limited. In the next part, we will explain exactly how the IRMAA system works, how much these extra Medicare charges can cost, and what steps silver owners can take to avoid unexpected surprises. The reason this situation catches so many people by surprise is because most retirees never connect a precious metals sale with their Medicare costs. When people think about selling silver, they usually focus on the obvious things: the market price, the profit they made, and the taxes they may owe. But they often do not think about how that extra income could affect their Medicare premium years later. The key number Medicare looks at is called Modified Adjusted Gross Income, or MAGI. This number comes from your tax return and helps determine whether you stay in the standard Medicare premium category or move into a higher payment level, a Single large silver sale can change that number quickly, even if the money from the sale is not a regular income source. The profit from that transaction may still count toward the income calculation used by Medicare. This is why timing matters. For example, someone might hold silver for many years and finally decide to sell when prices are high. They may think they made a smart financial move, and in many ways, they did. But if that sale creates enough additional income to cross the Medicare threshold, the result could be higher monthly premiums in the future. The difficult part is that the increase does not usually appear right away. Medicare generally looks back at previous tax information. This means a financial decision you make today could influence your Medicare costs later. That delay is what creates confusion. A person might sell silver in 1 year, spend the money, and move forward without thinking about it again. Then much later, a notice arrives explaining that their Medicare premiums are higher because of their previous income. Many people feel shocked because they believe the government suddenly changed their payments. But the increase is usually connected to an earlier income event that was already recorded. However, there may be options for people who experience a major change in their financial situation. The Social Security Administration allows certain individuals to request a review if their income has changed because of qualifying life events. These events can include things like retirement, reducing work hours, the loss of a spouse, divorce, or other major financial changes that permanently reduce income. In those situations, a person may be able to file an appeal and ask Social Security to reconsider the Medicare adjustment. This process requires proof and documentation, so it is important to understand the rules and speak with a qualified professional before making decisions. The goal is not to avoid taxes or ignore the rules. The goal is simply to understand how different parts of your financial life connect. Silver ownership, taxes, retirement income, and Medicare are not separate worlds. They all interact with each other. A move that looks simple today can have consequences later if it is not planned properly. Before selling a large amount of silver, it is worth checking where your income stands and how that sale could affect your future Medicare costs. Planning ahead can help you avoid unpleasant surprises and make better decisions with the assets you have built over time. The biggest lesson is simple. Precious metals can protect your wealth, but you also need to understand the rules around converting that wealth back into cash. Knowing the system before you sell gives you more control over the outcome.